Were you surprised to see how much of a dovish pivot we got at his Jackson Hole speech?
His speech at Jackson Hole was surprising indeed. It's a big U-turn, and I find it a little bit alarming. There are three things. The first thing is he didn't mention the word gradual, graduality, which he always uses. Second, talking about risks, he didn't say even, he said changed. That's radical. Then jobs now are on the driver's seat.
Yeah. Do you think they might cut 50 in September?
So this change in the tone in Jackson Hole, yes, makes me say they might cut 50. Now it's about convincing the hawks on the board, which I think will be a little bit difficult given how much government spending is happening, fiscal spending.
Yeah.
This is obviously stimulating the economy, and let's not forget PPI is under pressure. Shipping rates, oil, you just talked about oil with Anthony. This is upside for inflation.
So let me just put this to you. If they do decide to go for a 50 basis point cut because he manages to convince the other members of the board that it's necessary, that the economy warrants it, how would the markets interpret that? Does it not seem a little desperate out of the Fed, or indeed sending a signal that they're a lot more worried about the state of the economy than we thought a couple of weeks ago?
We were discussing this just yesterday in the investment committee. It's a knife's edge. Some will interpret as, something's going on. Jobs are much worse than they are.
Yeah.
And the correction of 818,000 is massive.
Those BLS corrections.
Others will celebrate it. Well, free money is back or is coming back.
And so how do you think markets will interpret it, though?
Well, for us, we're interpreting, at least I can talk about myself, or ourselves, our company, we interpret it as things are worse. Jay Powell has expressed his lack of faith in the BLS jobs numbers several times. So jobs are worse.
It is, and we got that out of the BLS revision last week as well. The other big data point for the market this week is going to be NVIDIA earnings. So people are saying that once Powell is out of the way, the next big driver for where markets go from here is one stock only, and that is NVIDIA. Let's say NVIDIA disappoints. Is that going to be the catalyst for these stock markets to finally have a sustained pullback? Because we thought that was coming a couple of weeks ago, and yet we've pretty much fully recovered now. S&P is back to close to all-time highs.
Well, it feels there are lots of memes around. I mean, you've seen them where the whole world is standing on the feet of NVIDIA. So yes, if they disappoint, this will affect not only the U.S. stock markets, but many other foreign stock markets. Now, will they disappoint? I doubt. It's all about the guidance. The Blackwell postponement is not a positive thing. So we're going to be looking at the guidance. If they disappoint, yes, absolutely. I think NVIDIA will go back to $100.
Yeah, but looking at your positions, we've discussed this before. You're 40% equities. We've spoken about you do have positioning in U.S. equities. How do you account for the fact that there's so much concentration and focus on one stock in particular? Can you hedge, or do you just accept that it's par for the course?
Our U.S. equities positions are very small, and we look at non-cyclicals, dividend-paying, cash flow-generating companies. We're not into tech at all. This is too much volatile for us as institutional investors. Such volatility consumes our risk budget, and we cannot afford that. This is more a trader's market than an investor's market. We're into something completely else within the U.S. market.
Final quick one. You expect the U.S. dollar weakness to continue. Why?
100%. I expect it to continue because the carry trade has broken down. It will continue to break down. It's all about now the Yuan carry trade, if it's going to continue or not.